Hey guys, in this video I'm gonna cover the LMG trading plan and how I basically approach the market on a daily basis, and how I list the objectives that I want to see and the objectives that I want to follow uh, on my daily routine, right, to engage with the market. So I've added this template to our Discord group and a trading plan. Everybody can have access to it. So in this video, I'm just gonna break it down so you can understand it, because most of you guys are accessing this trading plan without knowing exactly what it means or what I'm trying to speak of, right? So first of all, this is the first page. It's quite a small and plain trading plan. There's nothing fancy. I just go straight to the point. And the first part, obviously, I do have my higher time frame trading analysis, right? So under higher time frame trading analysis, I've got objectives, right? I've got objectives that I look for on a higher time frame. Obviously, I didn't list them all here, but I'm gonna show you guys something, right, to fill up the higher time frame analysis section. Though I didn't list them here because I want you guys to fill up your own objectives of what you want to see on a higher time frame, right? And then yeah, so I left this space for you guys to fill up, so you can download this, fill up that part. And the second part is obviously a lower time frame. What you look for on the lower time frame, chart for your entries, right? So my lower time frame entries are based on the 1 hour, the 30 minutes, the 15 minutes, and the 5 minutes, right? So you have to make sure that your entries, right? You have to make sure your entries are within that time frame, right? And then from there, obviously, after identifying my higher time frame biasness and my entry setups, what I look for in terms of objectives, I go to risk management, right? So under risk management, I've got two kinds of risk management strategies. One when I'm conservative and one when I'm aggressive, right? So when I'm conservative, I'm looking for low risk to high reward trades, and when I'm aggressive, I look for high risk, high reward trades, right? So these risk management strategies that I do have obviously are based on the capital that I'm working with. So there's certain capital that I'm a bit more conservative with, right? Because it might not be all my capital, especially when I'm trading for profit. So I've got an FTM account, I've got my own personal accounts, and then I've got also other accounts that I do handle as investment accounts. So with those accounts, with the investment accounts, obviously I'm conservative because I know this is all my money, and yeah, I try to get more low risk trades and high reward setups than when I'm trading risk management. The second risk management strategy, where I try to be more aggressive by taking more high risk and shooting for high reward, right? So with different risk management approaches comes obviously with different capital allocations that I do have. So under risk management, also I've got some risk management components that I look for, like the number of trades that I put in mind. I know the number of trades that I take in a day, which is 2, right? I take trades in London and in New York. Sometimes I just take a trade in London, right? Sometimes I don't even go in New York if I make enough money in London. And if I'm sure that New York is gonna continue with the bias in London, right? I don't bother myself with that. And then the other thing is also risk per trade. I know how much I risk on a trade. It's something that's predetermined. I know before I engage with the market, right? So I risk 1% on each trade that I do take. But if I do take obviously 3 trades, I'm risking about 3%, right, on those trades, right? So in a day, I take about 3 trades and I end up with the maximum daily loss of 3%, right? I take 3 trades and I divide those trades within 3%. Like, let's say in London, right? In London, if I'm going to take 2 trades, fine, I take 2 trades with a risk of 0.5%, meaning that I'll be taking, let's say on a 100,000 account, I'll be taking about $500 risk per trade, right? So if I take 3 trades, that's like 1.5. So in London, I'll be risking about 1.5% of my account. And then later in New York, I risk about another 1.5, right? Making 3% overall for the day. And 3% is good for me. It works for me, right? And then obviously it's stop loss. I put in mind stop loss and I religiously apply the stop loss, guys. I kind of emphasize it even more to you guys. Please, 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 please. Especially the people that are beginning. I know most of you that have been trading for a while, you've learned your lesson. But for those that are beginning in trading, right, make sure that you love the stop loss. The stop loss is your only guardian angel, right? It's going to protect you from the harm, right? So make sure you apply the stop loss, and then obviously be aware of your leverage, right? On my end, I trade more of pro firms more. So when I'm trading more pro firms, I don't leverage is not on my mind because they've got their own leverage that they do set, and usually, yeah, it's set according to the account that you get. So if you get a swing account, the leverage is less. When you get the normal account, the leverage is 1 to 500. Then I prefer 1 to 500 on all my accounts. So that's about it on risk management. So I make sure that I follow these components, and there are more components that I look for in risk management, like trailing stops, taking profits, and other stuff, which is more bit detailed. And it's found it's in the advanced course of the strategy. Make sure to check it out and subscribe to it. And then the last part is the daily psychological tips that I do have, right? So I have some mantras that I follow every day. Like I shouldn't leverage. I adapt what the market presents me. So most of the times that we see setups fail, right? We see setups fail, and then we don't want to change the perspective. Like, okay, I made a mistake, right? Let me work with what the market has given me. I'll change my view. If I was bullish and then the market just breaks lows all the way to the downside, I'm not going to stick around and wait for the market to become bullish again. No, the market has just shown me that it's bearish. So I adapt to the market, right? I don't force my mind what I should think or what I should do. So that's very key. That's a lesson that I did realize right before I became consistent, right? I realized that making mistakes is inevitable. I'm going to make mistakes, but what counts is me adapting to saying, okay guys, I've made a mistake. I've looked at the market differently. I forgot to see this thing here, write it down, and then try to jump on what the market has presented to me. But obviously, I'm not going to repeat over and over. If the second trade goes wrong, I prefer staying away from the charts, because I know, okay, I'm probably losing my mind now. I'm going to trade after some time when I'm relaxed. I look at the trades, what happened here, and then yeah, I assess the situation. So adaptation is key, right? Adaptation is key. And then the second part is that I trade based on a sample size. I don't get attached to a trade. So I try to remind myself that on a daily basis, saying whatever trade that you're gonna have, however good the trade seems to be, don't get attached to it. It's just one trade in a sample size. So I trade with a sample size of 100. I know that I've got about 100 trades to take, right? I can't determine my trades based on one trade. How good I am as a trader, I can't determine of one trade, 2 trades, 3 trades, 5 trades, because guess what? Even professional traders have a losing streak of 8 trades, right? 8 trades. Somebody's been losing for like 8 trades, but it doesn't mean that they're not so good of a trader. No, it's just a drawdown. Every system has got a drawdown, right? Every system is going to go through that drawdown phase when they do lose. So despite that, I don't trade off a sample size. I don't base all my information, my capital, saying I'm going to risk 50% or 20% of my account off just one trade because of excitement or whatever. No, right? I feel like that's stupid. So I definitely trade off a sample size. I look at myself looking, okay, I'm trading off 50 trades, and I'll see after 50 trades, that's when I assess my performance and how did I perform, right? And then the other one is always set a stop loss. So as I said earlier on, I religiously apply the stop loss. So I remind myself on a daily basis, do I have stop losses on? I make sure I do have. And then the last mantra is take frequent breaks when you're in position. So once I enter trades, right, I take breaks. I don't stick on the charts trying to see where the market is, what the market is going to do by a tick, right? That disturbs my psychology, and I feel like it does to a lot of people, because it makes you, it spikes you to make the wrong decisions, right? You try to widen your stop loss, you try to tighten your stop loss, you start to see things that you didn't see in the first place. So just analyze the charts, see what you have to see, set your stop loss, set your TP, and then after 30 minutes, check in on your charts, see how it's performing and the likes, right? So yeah, don't spend too much time on your charts. Become a chart zombie, and you're gonna make a lot of bad decisions afterwards, right? So those are the 4 things that I look for, right? Those are the 4 things that I have in mind. Higher time frame analysis, I've got my objectives and checklist, lower time frame checklist, risk management plan, and daily psychology routine, right? So from there, I'm gonna go through my process with technicals, right? So with technicals, guys, what I do is that I look for the weekly and the daily range on the higher time frame, right? And then I look for supply and demand on the higher time frame. I see if the market is overbought, oversold. From there, I identify, right? From there, I identify divergences where I'm having bullish or bearish divergences, right? And then I check for imbalance and liquidity, and then I also check for events of the day, right? So that's my checklist on a higher time frame, what I look for to identify the trend, whether we're in a continuation or we're going to reversal, right? And then after establishing that fact, let's establish that I'm anticipating a reversal in the market right now. What do? I go on the lower time frame, right? I go on the lower time frame to find entries, right? I go on the lower time frame to find entries, and I look for the Asian range, right? For accumulation during the Asian range, London manipulation, London OTE, New York OTE, and London close OTE. So I look for a lot of OTEs because by then I would have identified the swing of the day. So I'm just looking for entries into the swing, right? And then from there, risk management. Okay, obviously I went to my risk management plan. This is a bit more revised. 3 setups trade, loss per trade 0.5 to 1%, daily maximum loss 2% to 4%, right? So that's in a range with the daily maximum loss, but it shouldn't be more than 4%. 4% is good for me. And then from there, I journal my trades, obviously record entry points, how I handled my emotions during the trade, my risk appetite, and technical application. So with technical application, obviously I see whether I applied all my technical objectives as I was supposed to, right? I look for that, and then I check whether my risk appetite was something that was worth, right? Something that was like, did I handle this accordingly or I didn't, right? So I want to show you guys an example of how I look for these technical analysis objectives, right, from the higher time frame to the lower time frame, right? So this was on the 7th of September, right? On the 7th of September, I want to show you guys how I took the approach of the market, right? So early in the morning, obviously I woke up in the morning. This was around I went to the charts. I went on the charts around 9 a.m. So 9 a.m. this was my trade, the trade idea that I sent on a higher time frame, right? Nasdaq higher time frame idea, where I sent through this biasness right here, right? Identifying my divergency, price being on the demand zone, identifying my balance, identifying my order blocks and liquidity points, right? And then from 9:31, right? 9:31 in the morning, then 9:39 I send my lower time frame analysis, and I'm expecting the market to be bullish, right? Today I'm expecting the market to push to the upside, because remember, the higher time frame already I was bullish on the higher time frame, right? And then from there, what happens? We saw price push to the upside massively, right? This massive momentum to the upside, right? And then from there I just started looking for OTE. So this is the first OTE that I look for, right? So no, this OTE I look for somewhere here, right? But we didn't get it because price left us behind. So I was looking for another OTE here. That price invalidated, and was like, you know what, guys, there's a demand zone here, right? If we don't respect this demand zone, then we might tap into this imbalance ready and order block, right? Because we've got this kind of like inducement formation happening right now, right? So from there, I jumped on this demand zone, right? I jumped on this demand zone, and then I also sent it. I'm still biased on buys, just waiting for price to get to my point of interest as highlighted, right? And then yeah, I also send a breakdown here saying, guys, watch my breakdown that I sent for the week. And yeah, after that, price just shoots into my direction amazingly. And then from there, we made some good profits, about 7k, right? About 7k US dollars. And this was where I entered my price from, as you can see, right? I entered at this point. So this was an example of how I look at my daily process, right? From a higher time frame of a board of a sort, divergency, imbalances. I also look for news events that are going to affect the market, obviously. And then lower time frame, Asian range, London manipulation, and OTEs. So yeah, guys, that's about it. That's about it with the trading plan. So make sure that you get it right, and then you fill up the blanks here. You put in what you look for on a higher time frame, on lower time frame, and yeah, and just make sure you follow the plan, because there's no need of having a plan if you're not going to follow it in the first place, right? So you gotta have to follow the plan religiously, guys. You gotta have it all the time. You gotta believe in the plan, right? Believe in the plan, believe in yourself that you can execute the plan and do it consistently, and that is gonna help you out in the long term, right? All right, guys, hopefully this video is helpful. Don't forget to check out the trading plan format It has been added in the Discord, and you can also find it in the bio of this video. And also don't forget to share, to like, comment, and subscribe to the channel. Right. All right, guys, see you in the next video.